Good morning, beautiful people of the internet, and welcome once more to our Sunday special spectacular live, joined as always by the lovely Helen Chorley, the enigmatic Piotr Rusinek, the amazing and magnified Adam Lawrence, and the somewhat linguistic Jay Howard. So we are here, 12th of February 2023, and we have loads of news to share. As always, we have the breakdown of Adam Lawrence's Sunday supplement, which we will put into the links so everyone can check it out if you haven't checked it out before. There's an entire back catalogue there for you guys to gorge on, of course. There's been a lot of responses to the recent auction results for the last 10 days. So anyone interested in the mood and method of property at the moment, then we can jump into a bit of that. And I'm sure Helen squirreled away a little tidbit of something that's kicking off somewhere along the way. So plenty to share. We normally let Adam kick off first because that takes 45 minutes, and he's leaving us a little bit early today. He's on a journey of rediscovering his youth via his sons and their rugby playing. So let's see where we kick off to. Adam, take it away.
Vicarious living, as they call it, Jay. Absolutely. I'll be shouting accordingly from the sidelines, getting tutted at by various people. So I decided this week it would probably be worthwhile to go a bit further and deeper into the detail around the Bank of England report from last week's meeting. But there was a couple of bits that I had to throw in there before I really got underway on that. And the first one was something that we have batted around actually on this show at least twice, if not three times or more over the past sort of 6 to 9 months. And Mr. Putin and his energy minister announcing they'll cut their oil supply by 500,000 barrels of oil per day from the 1st of March. Now, this is not a coincidence, nor is it something people haven't seen coming. The theory has been, what if, so let me just throw some numbers out there to put it all into rough context. Global supply is around about 100 million barrels a day. Russia production is around about 10 million barrels a day. It's not too early on Sunday morning for the mathematically astute to note that's about 10% of the global supply. 500,000 barrels is about 5% of Russia's supply and about 0.5% of the world's supply. So this news came out on Friday, round about midday, as these things tend to be timed for. And the oil curve went like that, as you can imagine, and the price adjusted upwards very quickly. It had been trading relatively sideways. It shot up and then traded relatively sideways for the rest of the day. So it wasn't a big dance around sort of situation. It looks like, look, there's new information in this market. It's been priced in and now we're trading at a new price. That's what it looks like. The differential was 2.6% in the world's supply, in the price, sorry. So the relevant maths or the relevant ratios here, 0.5% means 5 times the impact on the global price. Or 5% from Russia means half the impact on the price. So their remaining 95% sells 2.6% higher. So their oil revenue doesn't go down by 5%. Their revenue goes down by about 2.4, right? But even that is not the full picture because there's still costs of extraction to consider, of course. So the correct way of looking at that would be 2.6% extra margin. So I didn't look up what it roughly costs Russia to extract a barrel. It's on the cheaper side, but not as cheap as some of the Gulf states, as I understand it. Bearing in mind, I'm not an oil trader. I never have been, as I always say in these instances. So probably from a marginal profit percentage, which is how we economists always look at these things, they probably cut 5% of their supply and increased their margin by at least 5%, which is not ideal because this is, if you go back, Putin throughout this whole scenario has been a relatively straightforward telegrapher of things that are to come. So I'll give you a couple of examples. Late January, early February 2022, a lot of Russian troops started appearing around the Ukrainian border looking fairly difficult. The initial noises were, this isn't as bad as it looks, folks. Then there was some intelligence that came via the Americans that said, he's definitely going in. and then he went in. August the 31st, 2022, after months of speculating this would happen, he started messing around with Nord Stream and these essential repairs. And I mean, August the 31st, it's not even a date remotely designed to disguise anything. It's happening because winter's coming and people are going to start filling their gas reserves, right? And sure enough, Nord Stream went down to 20% of its volume and then mysteriously exploded. Whoever was behind that, we still don't really know for sure. But it all happened in the most opportune date that it could have done. And now this is, right, gas season's kind of nearly over and the European storages are disappointingly high if you're Vladimir Putin, right? So that's Europe sort of shored away until October next year, realistically. What have I got that I can mess around with? Well, oil. In America, they tend to call this summer driving season as we get into it. We're a few months away from that yet. But oil demand tends to go up, gas demand tends to go down. So what a great time to mess with the oil price. And this is simply a little bit of a flex, but I also think it's a little bit of a proof of concept. Now, before I announce World War 3.5 or wherever we're up to by now, I think it's probably important to also say on the mitigating side to that, that the 2.6% rise probably bakes in a little bit of allowance for, well, we didn't actually know he was going to do this, but now we do. There's traders who are thinking, well, there's a huge big upside here. We've seen $140 oil in the last 12 months. It was very brief, but we did see it. If he messes around like this, I don't think there's a problem with seeing $200 oil if he did cut, say, half of his supply. If he cuts half of his supply and it only puts his revenues down by 5 or 10%, or even increases his revenues, and certainly in terms of if we talk margin rather than talking revenue, of course, as the price gets higher, the cost of extraction becomes less important because it becomes less of a percentage. So it's important to also understand the maths of that. But still, if this loosely looks like a near free bet for him, you can be pretty sure he's going to do it. And the problem is, you know, his pals in OPEC Plus who can't really mess with him, like our great friends, the Saudis, who also won't mess with the Russians because they're great allies when it comes to oil production. You know, there's a case of they doth protest too much here because it's like, oh no, all these things are happening that put the price of oil up. We'll have to help, but we can't actually supply more oil because that might upset our dear friends, the Russians. So we'll just have to sell our oil at the higher price. Really sorry, guys, but the market dictates that, and there we go. And there's a problem there, which also, this is not coincidental that China have recently started to come back online, although what people might not realize is what's happening in China at the moment is there's kind of some voluntary social distancing going on and a voluntary suppression still in the economy. So it's not like China have moved away from zero COVID and off we go, bing, bang, bong, set the fireworks off. There is a big wave of what appears to be Omicron going through the population. But of course, as you had 1.4 billion people who are largely not exposed, and Sinovac has not been as effective as some of the other vaccines, as we understand it, trying to fish the propaganda out from the reality, of course, as you have to do throughout the whole of pandemic-related and probably any news-related items, really. That's a lot of people in hospitals dying, nervous, concerned, all the rest of it. Quite often multi-generational households. So some of the problems there probably reflect back to a very, very watered down version of an Italy or a Spain rather than a UK, which was just a big fat mess really when it was all going on. So that's got to be taken into account because where's my angle on all of this apart from everything? Guess what? Inflation, right? So this is everybody seeing that inflation is going to calm down a little bit quicker than I really believe it's going to. And this is an example of one of those risks to the upside that we have specifically discussed. And I use the words one of advisedly. So this week, we've seen the bond yields bounce right back to where they were before the Bank of England meeting. So from a trader's perspective, they tested the lows. They tried to get down to those sub 3% rates that we'll all be looking forward to on the 5-year gilt. And they've ended the week back to where they were before midday on Thursday last week before the Bank of England meeting. So complete retracement on that front, which means mortgage rates are loosely going to stay-ish where they are. there's a longer term force sort of dragging that downwards. There are some really interesting arguments around that, but I still think a lot of this debate is framed around the world where we have the sort of ultra cheap money, and I still believe that is over. I think things will tend to get cheaper because we've got a very limp, very lackluster economy. Which now,
do you think the rates are coming down because the banks need to now fulfill their kind of numbers for New Year 2023, and they just have to compete for the business?
I think it was easy. I mean, you've got to bear in mind a few things. Something I put in the supplement today, which sort of broadens that argument a bit, and I think it's a good one. We went into the Liz Truss scenario and came out of it when she was deposed and all the rest of it. Now, November, December is not traditionally very busy for the property market, and what we saw was probably people hung up the boots a bit early for Christmas. And I think a few of the main players could afford to do that because a lot of the lenders had their best year ever, right? So a lot of brokers we spoke to, a lot of lenders, a lot of all the rest of it, they had a record year, which I thought myself, bearing in mind, everybody tends to pack up and go to Dubai on the 9th of December or whatever, apart from saddos like me who are burning the candle down to the wick at 4 p.m. on Christmas Eve, desperately waiting for deals, which is usually a bloody good tactic, to be honest. They've normally jacked it in, but of course that the board meet early January and go, right, we had a great year last year, jolly good, pat everyone on the back. There's a bit of a bonus. What are we doing now? What are we going to do now? So the market took, I think, probably 2 or maybe even 3 weeks longer to get off the operating table than it normally would do. But it did seem to liven up towards the end of Jan. You guys might be able to comment on some of the auction stuff that we've seen, or maybe you want another week to get a full roundup of all sort of the early action. But where are you guys at on that rather than me rattling on?
I think we need a few days for a comprehensive picture.
Yeah. Fair enough. That's what you get Sunday 9 a.m. folks. News hot off the press. There you go.
I think it's like the last few days were kind of a bit of a mixed result. With some auctioneers having the best ever auctions and some auctioneers having the worst ever auction.
Wow.
So what do you regional or type of stock mix or pricing? High price, low price, or
they're both London auctioneers, but they have lots regionally. In terms of pricing, I think one is probably slightly more aggressive than the other. But the catalogue sizes were completely different. So one was about 40 lots, the other one was about 240 lots.
Yeah, and also was different types of sellers in both auctions, because one is more kind of trader, private individual price, the other one is more of a corporate type.
So what did well? Which ones did well? Which ones did badly on the fly?
Auction House had the best auction ever. They sold over 200 lots.
So Auction House London sold the most lots they've ever sold in a single auction, which was like 178 lots.
Wow.
So which is huge for them. They raised a shade over 30 million in one day. They started their auction at 9 something in the morning and didn't finish it until 9 something in the evening. And there's only 2 auctioneers for 12 hours. It's a marathon task. People can look at auctioneering from a distance and say, all you have to do is just count the numbers out or shout them out and bang the hammer down. But there's a lot more that goes into it.
I was going to say, Jay, I don't suppose he's watching, but God bless you, Andrew. That 12 hours is a lot of bin stock. If you had 12 hours of bin stock, that's for sure.
I'm sure he gave 3 or 4 hours away to Mr. Weir, I'm sure. But just as a palate cleanser every couple of hours, just
like a sorbet,
Yes, but a moose bouche, if you will. but no, but even then, it's not dry auctioneering, and people know what I mean by that when you see some of the. I mean, for instance, you want to see some dry auctioneering. Allsops are going back into the room. They did a press release a couple of weeks ago, and that is, if you like your Chardonnay dry, you need to go to an Allsops auction. If you like something robust, a little fruity, but with a lot of body to it. I don't know, a Merlot, for instance. Then Auction House London is
I've always
your particular
been
choice.
a full-bodied man myself, Jay. If I'm honest with you,
I know we have so much in common.
In this conversation,
practice what I preach. Be it till you are it, or whatever they say. Absolutely,
that's it. But no, I mean, monster effort from Auction House London, because and they were coming off of the back of Savills had a so-so auction. I think the numbers towards the end looked a little bit better than the reality on the day. But that was a quicker auction. It was a slightly smaller auction. There's like 5 auctioneers between them, and they'll swap every 10 or 5 lots or whatever. So less of a dramatic kind of result their side, I think.
I say give the people what they want. I say give the people what they want.
That's it. Yeah. There'll be big kind of people standing outside the BBC when Holmes had the hammer on saying, "We want more Andrew." There'll be big placards. Yeah, he won't be able to get out of his door this morning if he's watching this with an ego like that. Bless him. But Stretton's, on the other hand, Stretton's had a horrifying day. 40-ish lots, 7 or 8 actually sold of that 38, 40, I guess. Very rounded figures. But yeah, it was a little bit of a shocker, because they are normally quite a stable 50, 60 lot auction, 70, 80% sold, if you take out, what's withdrawn and work to real figures of what's taken in.
Wow. So
do you
think they've been guilty of pricing the market from 3 or 4 months ago rather than today's market as it stands, maybe?
It's difficult to say. I mean, Andrew Brown runs a fairly tight ship, and he's been auctioning. He's been under the hammer for 20 plus years. Edison's, he ran countrywide, so he's no slouch, and he knows what he's looking at. And he's I literally sat at the desk opposite him for almost 2 years. He's really quite not aggressive in terms of how a trader would be with their prices on guide and reserve, but he does cut it close to the bone, and that's someone who's quite corporate in how he approaches things. So no, I don't know. I don't know if there was a failing in marketing. I don't know if they just picked the wrong day of the month, if they've structured their week the wrong way, or they didn't give themselves enough time. It could be anything. But you're seeing real kind of a real dichotomy between, okay, Savills had a so-so day, Auction House London have done the best day they've ever done, Stretton's had a really bad day. There's no real kind of barometer or yardstick that you can measure against who's doing well and who's not doing well, and what kind of stock they're doing well with at the moment.
There's a question, Jay, from Dominic. What bodied auction is Lovett's?
That is a bloody full-bodied auction. I have I don't want to play favourites or anything like this, but last Thursday was their auction, and I was heavily distracted by spending a lovely day at Partners in Property London, which was epic and amazing as all things are. But I missed Sarah Herbert with her first ever auctioning session, where she was the auctioneer. I've known Sarah for almost 10 years. But the beautiful thing with the Lovett's auctioneers is it's almost an entirely female team. They have a male auctioneer that kind of pops up every once in a while, but yeah,
I reckon Dom's just trying to get you into trouble here, Jay. If I'm honest with you,
he can try, but
he wants you to compare it to an elegant rosé or something like that. I can just feel it.
They're more like a bottomless prosecco lunch. These girls are high quality.
Probably right at my crowd.
Yeah,
I like it. Yeah. I like it.
Actually, I'm glad they got a mention, because one of the property sisters reached out to me. She shared something, and I saw Sally on there, and got good feedback from one of the property sisters about how Sally was doing and ran it and everything. So,
great,
well done, girl. Well done, ladies.
Yeah, so now they've got 2 female auctioneers, which is kind of like that's breaking molds, because no other auctioneer. There was an auctioneer a good couple of years ago that had a female auctioneer, and I can't remember her name, but she was actually really very good. But to have 2 and almost the entire team be female is pretty fucking awesome.
It's the equivalent. It's the equivalent to riding in the Grand National and then winning the Grand National, I think.
Yeah. But yeah.
And another team that's fully female is like Saturn Cash, but they actually hire Andrew Binstock to do the auction for them. So it's like a female, almost 90% female team with Andrew Binstock.
Behind every great man, huh?
Well, I mean, these girls are brilliant because essentially what they do is they do everything. There's like 6 or 7 of them, and like their process, and they're really on it, and they give all the crap jobs to men. it's like a complete swap around.
Sorry,
like
shouldn't have laughed so loud.
Kathy, who runs that auction firm, her husband goes and does all the viewings. All the viewings of 100 plus properties. The guy spends his entire life in the back in his car, right? It's horrendous.
The ladies do the strategic mastery, and the guys make the tea and take the bins out. Yeah, absolutely.
That's it. So he's literally, and they just bring Andrew in, A, because they love him, B, because he's a brilliant auctioneer, and C, because none of them really want to do it. They've got their whole thing. They run the entire thing.
Mate, I was really hoping you were going to say if you pay Andrew enough, then he'll identify as whatever you like. So it's fine, no problem.
You get enough Moscow mules in that boy, and you can get some really interesting responses, I'm sure.
Ed is saying that Max and Allen auctioneer is a lady as well.
Yeah.
That.
Yeah.
I'm sure there's some Property Sisters research to be done on whether the results are better, actually.
But if it's funded by Property Sisters, we already know the results.
Exactly.
We need an impartial, It's like finding out whether cow's milk is good for you, but all the reports and research is done by the UK Cow Milk Agency
Dairy
Company.
Council, yeah.
A touch of marking one's own homework there. Yes, indeed. Like all good government inquiries, Jay, as you know.
Yes, indeed.
Or indeed, let's just draft in Lord Panic when we need someone expensive to get us out of a blatantly difficult and impossible situation. Yeah. Very clever. And I just digressing back to the meat of the supplement, really, because we got slightly off track in a very worthwhile conversation. It's really, the rest of it is kind of quite macro. So it's talking about the bank's forecasts, which have drastically improved from the miserable report of November, which really was. But that's kind of like, wait till there's an earthquake, then do a report against how safe we are from earthquakes. It's just not the time to be bullish in any way, shape, or form. And then so there's about 20 or so. It's quite interesting actually going through it in detail, because the bank have about 20 forecasters they listen to, one of which is not Adam Lawrence, but obviously I'm lobbying to change that as we speak.
Not officially. Not officially.
Yet. Yet.
I know about 3 PhDs short, mate, I think, unfortunately. 0 out of 3. So it shows sort of where they're at with unemployment, which is obviously fairly crucial, although there is a bit of a risk at the moment that because wages aren't moving where inflation is, even how many people are employed is a bit of a crude measure, because you have to look at the average hours that they work, for example, because what we've got to look out for is the traditional recession cycle. And this isn't traditional by any means, because apart from anything else, there was this US number of jobs created in January, which was so far away from expectations. It really blew everybody away on the upside, and is making a lot of people say, actually, the US is not going to have a recession this year. Now, you've got another one of these really interesting things brewing, or interesting in my world anyway, where you've got inverted yield curves. Now, the inverted yield curve, especially when it's bunched up at the front end, is a very, very reliable indicator of a recession. And the bond markets, as we've said before, are very, very liquid things that you would expect to be pretty damn intelligent. So they're very clear that US, UK, and Germany, and this is the most inverted the yield curve has ever been in Germany, alongside some other major economies, are having a recession in 6 months' time or so. Very, very clear. Now, what traditionally happens in the job market is you start with the recruitment freeze when everybody sees it coming. Now, if you look, the big boy, Microsoft, Amazon, Google, etc., that's where they are right now. They've started the recruitment freeze, right? And then you go into the cutting of average hours per worker. So if you're just counting the number of people in work, you don't see any of those things because you have to go deeper into the data and you have to look at the average number of hours people are declaring that they work, right? And then you get the cuts as they come. Now, that's all well and good, but we're not in a traditional cycle on the way into a recession. Unemployment hasn't been this low for nearly ever unless we go back to sort of the 50s and 60s, and there might be some figures from the early 70s like this. And vacancies have never been anywhere near where they are. And it's not only limited to the UK, that argument. The US is still very similar, where there's about 1.5 job openings for every single unemployed person. So it's really against the backdrop of, it's all very well and good using this is what happened before, but the tapestry at the back is very, very different. So the job market and the vacancy side of things is really quite robust until we see those traditional recessionary forces. Now, on the back of that, the thing I find difficult to reconcile, although I do think it will happen, is I think wages are going to be up sort of 5, 6, 7% again this year. And the Low Pay Commission have already indicated about 6.3% for minimum wage for 2024, so which tends to lag behind a little bit. So that's their reflection of where things will be in around September this year, something like that. So these things are relatively incongruent, but this still all comes back. So the bond markets are betting we'll be cutting rates. And when I say rates, I mean base rate by the end of this year, right? Or before the end of this year. They're thinking the same in the US. They're thinking the same in Germany, right? But if inflation is more persistent, what people I don't think really are factoring into this whole picture is that the number one thing that the central banks will do is squash this inflation, right? So if we go forward 6 months and say inflation is 5.5 or 6, right? So where are we going to be in 6 months' time? We're going to be in August. In October, we're going to see the end of the price cap on energy. Then we're back open to what's going to happen with Russian gas, not as powerful as it was, but oil is still a big, big weapon for them to wield, as we were talking about earlier. So there's still going to be inflationary forces from here. Crude is up 9% this month now on the back of that 2.6 the other day. Now, it's volatile, right? But it could easily climb well back up over 100, which is going to squeeze those petrol prices at the pumps back nearer to £2 again. And as I've said earlier on, it could shoot beyond that. We just don't know. So I'm not so bearish on the number of jobs. My concern is, are those jobs enough for people to be able to afford to live? Because that's the real true measure. And then it talks a bit about growth, that the reality of we're looking at about 1% growth going forward as the bank sees it as a sort of equilibrium growth rate. Well, that is just horrific, really, from a standard of living perspective, because 1% growth, that will all be going to the top 10% in society without a shadow of a doubt. No one will be getting any better off for decades if we carry on along those lines. The problems are, the only ways we've got to fix it are increased productivity, which we're notoriously bad at doing. We probably have to cut some worker hours in order to do that. And maybe that will be a way that we will go, because that will change how we measure things. Or we need inorganic growth through inflation or through immigration, both of which are quite likely to be fairly significant this year, of course, but it papers over the cracks quite falsely. But if we get back into that sort of 5-ish% range for inflation, and that's sort of where I am early part of next year, the banks see it as more like 4%, which I think is hopeful, to be honest. I'm at 5.5. And that's only because these base effects have really worked their way through the system once. I mean, at a simple level, if you give people 5-6% more money in their pocket, 80% of them are going to spend it all, which is going to enable And if you're going to put their wages up by 5, 6 or 7%, companies are going to look to increase their prices by 5, 6 or 7% to maintain their margins. So this is how a spiral effectively works. The company might swallow a little bit of that margin, but they're not going to swallow loads. So you are self-perpetuating those increasing prices on an ongoing basis. If you break down the current inflation, you've got more than 2% inflation in goods, more than 3% inflation in services, and the rest is coming from energy and indirectly or directly. So everything on it, all the individual components on their own are all above the inflation target, and they all move, semi-independently of each other. Although the common ground is still going to be the wage wave that's going to. So once we work out some of this industrial action, which still, as we said, might take the thick end of this year to do, or maybe even more. They will be keen to bring it to an end as soon as any electioneering starts in earnest, of course. And I still think we might see a little shaving off the old tax somewhere just before the election. But it's like, mate, it's gone up about 3,000%. So taking off 3% doesn't exactly work. But they'll hope it will. I did talk a little bit today about the poll numbers and where they're at the moment. So Sunak's kind of had his honeymoon, and he's still looking a bloody long way adrift. So the likely scenario is small Labour majority, and the second most likely is large Labour majority at the moment, which I have a few people crying into their beer whilst listening to this. But just remember, it probably means LHA rates will go back up, and social housing will be likely a very strong holding strategy. So it won't be, as always, it won't be the end of the world or whatever. I also had an interesting chat with someone this week at Pip London about private school fees, because the word on the grapevine is that VAT will be applied if the charitable status is removed. But I actually think that's fundamentally incorrect, because the charitable status is not what governs the VAT rules. What governs the VAT rules is that they're providing an educational product. So they will have to rewrite the VAT rule book, which will include, remember, education is not just school, right? And it's not just university. Yeah, so there'd have to be a fairly significant reworking of the classification of what schools provide. That's different from removing their charitable status. But having said that, I can't see, especially if you go to let's go after the big boys like Sunak's alma mater, Winchester or Eton or whoever. I'm not sure what sort of bursaries they're carrying and what sort of funds they're running, but I'm sure they'll run into the billions. They're going to be able to get some pretty salty tax advice about how that stuff's structured. So all that I'll mean is, if not already protected in trusts, then re-protect in offshore trusts. And you'll never take me alive, Governor, I'd imagine. But there we go. So I think, like a lot of things, when you get into the detail of it, there's a lot of much ado about nothing. Although I do have my one hand grenade on the whole Labour government environment is, what if the far left are letting Starmer get in as the stalking horse and then boot him out and reintroduce one of their completely bloody idiotic far lefties, because that could see us go in the same direction as a Wales, who are going in a very bad direction for their private rented sector, or a Scotland, who are going in a pretty rubbish direction. Scotland, I think, will still be tradable. Wales is getting more difficult. And the thing is, if you are national, you are likely, as we are, you look at it and think, well, I'm not scared of regulation. I'm not scared of barriers to entry and all the rest of it. But I might just want a bit of an easier life for a bit. So if I look at 10 properties to sell today, they're going in Wales, because I don't see this helping the Welsh economy or the market or the tenancy situation or anything. And because they're, again, I'll borrow a phrase from Jay's playbook, because they're a bunch of fucking such limp dick bastards, right, in Wales, then they're quite likely to make some of these really poor decisions that will significantly damage the sector. And because the sector's small enough to really take some pain, I mean, a lot of people don't realise that 37% of people in Scotland rent, for example. So the PRS is double the size in Scotland than the whole of the UK. It's disproportionately large. Probably the only place where you could beat that 37% would be not necessarily Greater London, but certainly Inner London itself. And of course, there's huge swathes of inequality in somewhere like inner London, where you've either got it all or you've got fuck all, quite frankly. So we're just heading towards a more dichotomous society, and forget getting rid of the word landlord. It'll be full feudal if these guys carry on with the direction of travel. But they've got no plan. They've got no answer to it. They're a bit of a disgrace. Won't be leaving England to cross the border into Wales anytime soon. Sorry to my Welsh friends and compadres, but that's where we are. Drakeford wants rubbish.
Well, that kind of reinforces a lot of stuff I say. People always say, where don't you invest? I always say, we don't do Scotland because it's a different kind of legal system, and it's not a barrier to entry for us. It's just a complication and an annoyance. We don't really want to get involved. They're easier fish to fry. We don't touch Wales because it's looked good the last 5 or 6 years. But all you need is one economic downturn, and Wales, Scotland, Devon, and Cornwall sink into the ocean in terms of capital values. You get a little bit of that in the northeast as well. So we just we stay away from there.
It's easier to keep things to England because the laws are simpler and we at least know them, so we know what to expect. If you go to Scotland, you never know what to expect.
Makes sense. We'll have to detonate that nuclear bomb. I think I'm going to have to love you and leave you, and pick through the wreckage of my tome from this week, and see you all next week, I think.
Nice one. Thanks,
Before
Adam.
you go, what date on the ballot have you marked out for World War III? I just don't want to pick the same date. I've got to go a day after or a day earlier, I think.
Well, what did it? I give it 2 months, 3 months before Putin really starts to mess around with the oil price, and then we'll see. We'll just have to see what happens. The curve is still in. Helen will have to set me right if I get it wrong, but I think we're still in backwardation at the moment. But it's when that reverses that things could get really. So backwardation is when the price is lower for the futures contract the month afterwards. So if you wait, you get it cheaper. What will get interesting is when we go into contango, it's called, isn't it? Contango. So I read Trading 101, just never done it. But, that's my efforts for the day. Here you go. Good luck, everyone. Good luck.
See you, Adam.
See you.
Oh, you got some new words there, Piotr, for your vocabulary.
I know. I'm making notes for my Google search.
Contango sounds like a dance, doesn't it? It's
it's not that much fun.
The best of them, yeah.
Not quite that much fun.
Contango is a situation where the future price of a commodity is higher than the spot price. Contango occurs when asset price is expected to rise over time. We go.
So that's what we normally have.
That's the educational
real estate
element.
is in contango, isn't it? It normally is.
Yeah.
Is it?
Yeah.
Okay. Cool. Okay. Well, speaking about real estate being in contango, possibly, we picked a subject for our for our competition, right, Jay? You want to? Do you want to tell people what the subject is of the 500-word article that we and ChatGPT are going to write?
Yeah, so the winner is Ivona. Ivona suggested, I've butchered the name, I always do. Piotr looks at me like, who the fuck are you talking about? But
Ivona, I know you did well.
I did well. Okay, so Ivona, I always second guess it now. And the subject is the future of buy-to-let in 2023. So
I did shout out to Haley, who I know is watching. I did like her question about good guys.
Yes,
so it's very apt in this gang of nice guys. I thought this was a very apt question. But anyway, yes, Ivona, well done. You get to choose your prize.
I don't think a nice guy is a compliment necessarily.
Oh
no.
This is where we could go off on some real gender politics stuff here now.
It's not a good thing.
Well, okay. It's the opposite of that. That's what I meant.
Okay. Yeah.
Oh, look, Ivona, well done. She's here.
Yay.
Yeah, so
Wow.
Ivana has selected the topic. We are now in the process of writing our 500-word articles, which myself and ChatGTP have done. I'm just waiting for Piotr,
I'm halfway
Helen,
through. I'm halfway through.
and Adams, and then we'll release it as a blog. It will go on to LinkedIn first, and then we'll share across to Facebook. And I don't know how to do it on Instagram, but Helen will know, and it will go on Instagram as well. And then it will be down to people to guess who the author of each one of those articles is. And then the winner will get to choose a prize, one of 4 prizes they will get to choose. So it looks like it's going to be either a 30-minute consultancy with myself, or Piotr, or Helen, or Adam. So depending on what you think you need in your life, you have 4 people here that will try and deliver some value in a 30-minute session. So it should be a nice bit of fun. And hopefully you'll be reading 5 perspectives on the future of buy-to-let for 2023. So there'll be some value in that as well.
Nice. Well, by when we're going to do this so that we actually commit to it? By Sunday next week, we'll be live.
By Sunday
Friday
next week. By Friday, people have 48 hours.
Yeah.
We should be able to expose the winner by this time next week.
Expose the winner.
Yes.
Good.
Expose them fully clothed before people start getting the wrong idea.
Oh, nice one. Really good.
We have any other comments? You look like you flickered away to something there for a second.
Yeah, I've got a few comments. People seem to be excited about the competition. Looking forward. That's all LinkedIn comments. So
I'm looking forward to seeing if we can tell which the chat GPT is. GTP1 is.
Well, I've left it completely unedited, so that should give a little hint. So I've left it completely unedited, which means there's probably a part of me who thinks that 1 or 2 bits need to be edited. So just read everything carefully.
Say you're mysterious.
Very mysterious.
Oh, good. Okay. Well, let's do it by Friday, and we'll give people 48 hours to read articles, and come back on Sunday and let people choose.
Cool.
Who's who. Nice one. All right, guys. Well, let's wrap up for today.
Let's give everyone their Sundays back.
Yes, exactly. And we're heading off to a wedding of a friend this evening, so
nice.
it's gonna be an interesting evening. And yes,
interesting.
Yeah, there's going to be no alcohol at the wedding, which will make it super interesting.
Okay, yeah.
Who needs alcohol when you have us?
Yes,
we'll keep the party
True.
Oh, nice one.
Amazing.
Thanks, everyone. Have an
Cool.
amazing Sunday.
Have a wonderful Sunday, everybody. See you next week.
Cheers, guys.
Bye.